end game for overhauling financial regulation may be nearing. How soon can Congress deliver a bill to the president? Well, Tom Gallagher is Institutional Investor's #1 ranked analyst for Washington policy research. It's a 7-year streak. He's here with us live this morning. Thank you so much, Tom. Tell me, how big of a weekend was it, and how big of a week will it be in terms of moving forward with financial regulation?
Well, I don't think it was a big weekend. I think senators took a breather after a pretty interesting week where they passed some tougher amendments. But looking ahead to this week, it looks likely that the Senate Majority Leader will try to move to close off the debate, which means if that's successful, they could have a final vote as early as Wednesday. That may be too optimistic, but I think it's pretty clear that the Senate's in the end game here so that they'll finish it by their Memorial Day recess. I would just guess that then a House-Senate conference would produce a bill to send to the president before the July 4th recess. So
in looking at these two bills on the House front and the Senate side, we did hear from Barney Frank saying there, in his estimation, the Senate bill is stronger, and that's probably what regulation is going to look like. What does that mean for people on Wall Street? I mean, what's going to make the final cut here?
Sure. I think that observation itself is quite an interesting one because I think everybody's expectation, I include ourselves with that, was before the Senate actually took this up, that the dynamic would be that the Senate would weaken the bill, or at least it would take it in a less regulatory direction in order to get the supermajority to get the 60 votes needed to pass it. Instead, it's really been a process of toughening amendments, which is a surprise and not the dynamic that a lot of people expected. So I think that you'll see a lot of what the Senate has adopted that will remain in the final bill. I actually think the most important thing, maybe this is more from a macro perspective, but the most important thing in here is that this is going to lead to a process that's going to produce higher capital requirements for the biggest firms, and that in itself is going to contribute to a tightening of lending standards that you often see in a post-crisis economy.
Meredith Whitney said something similar today in an op-ed, concerned that this kind of regulation is actually going to make it tougher for small businesses to get loans.
You know, I don't know about for small businesses, that's probably true, although if it's the biggest banks that get the higher capital requirements, the smaller banks may not see a higher capital requirement, and they're the ones that I assume that small businesses get their loans from. But I just think from an historical point of view, that's usually what happens, so that's what you look for. Beyond that, though, Margaret, as you alluded, there are a lot of changes in the rules of the game that are likely to happen, and so you're going to have higher regulations on individual products and on individual firms and in individual markets, and so there are going to be a host of rules changes that don't so much create winners and losers as I think just creates a little bit more of a headwind in terms of tighter financial conditions for the economy. I
was looking at your note this morning, and you think the extended period at the Fed is going to be extended even further.
Well, I do, and I've probably been among those who've been expecting an earlier rate hike than others, and so the note that you're referring to is pushing that out a little further. But I think the tighter financial conditions due to what's going on in Europe really give the Fed breathing space that, whereas the data have actually been coming in, I think, stronger, but I think that that'll give the Fed some breathing space to push it out further.